Good afternoon. It was meant to be morning. My script has already changed. I'm Karl-Magnus Wadsack from Equifax, known as Mags, so call me Mags. I'm the Strategic Growth Director, which is a very grand title for open banking at Equifax. And in that role, I manage our existing clients to ensure that they get the maximum benefit out of open banking and open finance. Thank you for joining us on this panel. I think it's down as a fireside chat, but they wouldn't give me an open fire. Health and safety said no. So I think that reverts back to a panel then if you don't have a actual fire. We're going to be discussing how open banking is proving to be a game changer to address the challenge of consumer impact because of cost of living. So, you know, everyone's aware what's been going on. Hopefully it won't go on forever, but who knows, you know, with random people coming in and changing stuff in the government. But what better topic than that to take you to lunch? Consider this your amuse-bouche. To get your palate tingling for the rest of the day. Right, I have with me a rock star panel. I think we're beyond boy band just about, of industry experts who are passionate about fair outcomes for consumers and have already embraced the potential for open banking to enhance the understanding of a consumer's financial circumstances to better meet the objective of addressing the challenge of the cost of living. Now, this is now a panel. I've declared it a panel. It's not a fireside chat. So I want your questions. So assuming you've all got phones and assuming you've all got the app and you know what Slido is, please put your questions through because otherwise it'll be a very, very short session. We need your questions. We've prepared one. After that, there'll be tumbleweeds, so get yourself ready. So to the panelists, we have, to my immediate right, or your left, I don't know, Tamsin Powell, who's Head of Credit Operations at Credit Spring, and their market differentiation is to give low-cost, affordable loans, low cost and zero interest. You just pay an ongoing subscription fee, which affords you the access to interest-free loans. And in the market, obviously at the moment, where money is tight, that's a great thing. And they're part of the Consumer Finance Development Institution, which is a body of lenders whose mandate is to get affordable credit into the hands of those who wouldn't normally get credit at good rates. We then have Charlie Evans, Head of Commercial at Totally Money. Totally Money are on a mission to improve the credit score of the 20 million underserved consumers, 20 million underserved consumers in the UK. And they already have 5 million people who are in their arms being cosseted and taken on that journey of improving their financial position by using the data that's out there to their benefit. As they work very closely with lenders to ensure that their consumers are in a position to get access to affordable credit, which is what this is all about. Fantastic. And then industry legend that is Julian Graham-Rack. He's the chief executive of Prin6, which was founded in 2019, which is an analytically led digital orchestration platform, which is there in order to allow lenders and other financial services businesses to create highly personalized, dynamic customer journeys very quickly within their own wit without having to reach out to the credit risk clever people to make the changes for them. And all of this technology spun out of the fact that Julian previously was in the lending space on the other side, as we call it, at Curo UK. You may have known them as Wage Day Advance in a previous life. And he was also the president of the Consumer Finance Association. So no one has a better temperature check on the access to affordable credit. Slido, has anyone put any questions yet?
I don't have Slido, but I do have a question.
Oh, all right, okay. It wasn't meant to work like this.
Yeah, I was just wondering if you guys could speak to the commercial model of giving interest-free loans for 3 to 6 months. Is that like a long-term play where you hope the customer is going to be faithful to your platform, or do you guys have any feedback on what the profit model is for offering interest-free loans in BNPL and similar services?
Wow, we've been caught out with a question straight away. if we talk about interest-free loans, I think Tam's in the best position to respond to this one.
Yeah, I mean, thank you, Max. Yes, interest-free, obviously we have a membership fee. Our model is very much subscription finance. So our members, as we like to call them, can sign up for a year. They pay a membership fee and they get access to 2 interest-free loans during that period. That's our model. So there is no, I think, thinking back to the Virgin presentation before that, they were doing the 3 to 6 month loans interest-free. I suspect their model is then to, some customers won't be able to pay back in that time and have to borrow to go over the term, but I can't comment on their model. But ours is very much clear from the outset. It's 12 months membership fees with then access to 2 interest-free loans during that period. The members have to pay off the first loan before they can access the second. So that's how we control that there's no late fees on the Credit Spring product either, so we're avoiding customers getting into any sort of debt spiral and not being able to pay back, so we have no late fees at all in our model.
Thanks, Tamsin.
So, yeah, we've started the introductions already. So you've kind of heard some of Tamsin's shizzle. But Tamsin, I mean, can you just introduce, we're going to introduce each of the panel formally, starting with Tamsin now, because she's already out of the blocks. Just to talk about how you use open banking to best support customers to address the issue of the cost of living for your customer base.
Yes, so a lot of what we've already talked about this morning, I think the pressures through the cost of living crisis, we've had an upsurge in applications as mainstream lenders are tightening up in some areas, and we're seeing a lot more applications, a lot more demand for our product. We get hundreds and thousands of applications every week, so we obviously cannot manually process these. So we use a mix of bureau data and open banking data in our decisioning process via Equifax. At the moment, we're also looking at building a primary open banking scorecard to better serve. A lot of our customers either have historic arrears profiles or they're thin files, so they're either new to the country or they're young and they don't have credit profiles that we can easily view or validate through traditional credit bureau data, which is where we then turn to open banking data to get a view of these customers and whether we can lend responsibly to them. The other area we're considering at the moment, and very exciting early discussions with Equifax, is where we can help existing members with any forbearance journeys, using open banking better in collections to try and make sure that any payment arrangements, forbearance we give is right for that customer and that they can afford to pay it back, and that we're not all wasting time making inappropriate payment arrangements and exacerbating problems for vulnerable customers.
Thanks, Tamsin. Charlie?
Yes, so I think if we take a look first of all, I guess why Totally Money are really focusing on open banking, and we heard earlier from Experian and all the focus across these free credit report providers and why open banking is so important right now. We did a report last year in partnership with PwC, and this identified about 20 million or so customers in the UK that are in this underserved market where they are not getting access to traditional forms of credit. This is most definitely growing this year. There is another 9 million pots identified in this that is what we call financially fragile. So if they were hit with a bill of circa £300 or so, they would need to borrow to move into or to fund that, let's say, and then they would move into this kind of underserved market. And so this pot is a really big set of customers at the minute. And we know from the data we've got in our system at the minute, across all the lenders that we work with across the board, that this pot is getting bigger and there is less availability of credit towards these customers. We look at this year on year, it's about a 20% drop year on year in the actual eligibility of loans and credit cards to these customers. So it's vital that we find new ways that kind of buck the trends, let's say, of how we can get credit to these customers that are most in need at the minute. So what are we doing at the moment? We're working very closely with Equifax and with Bud, who are our kind of AISP, our partner, to really try and sign up as many customers as possible through our journeys, through our apps and across the board on our services to give us their open banking data, and then working again as hard as possible on the other side with all our lenders across the board to basically feed this data into them, let them consume it, and help them kind of actually start to write more business, let's say, towards these customers. And that can be a case of writing more business. It can be a case of kind of dropping APRs across the board, and also a case of actually improving customer journeys through the flow. So we're getting income data at the start, that's income verification done. We've spoken to a few kind of lenders in the loan space that are saying that, I don't want the exact numbers on me, but the actual journey times of getting through applications is astonishing how much faster it is and the smoothness of that between an open banking customer and a non-open banking customer. And so these are the kind of ways in which we're starting to see it. And look, we're not perfect yet. There's definitely more room to grow. There's definitely more customers to bring into the panel. There's definitely more lenders to onboard and start to take this data. But I think you can see from across the board in this space here that everyone's on this journey and really trying to drive as much as possible to get the best outcomes as possible for the customers really at the moment.
Thank you very much, Charlie. Julian, you're obviously coming at it from a slightly different angle, from the orchestration of the data on behalf of lenders and other financial services providers.
Yes, so I was a lender, and for 6 years, a subprime lender, and the challenge we found is it was all about the customer journey. Didn't matter which end of the journey you were, whether you were originating or whether you were collecting, or everything was around the customer journey. And we found increasingly that kind of one-size-fits-all hard-coded journey with fixed data sets just didn't work, that were in code and really slow to change. And so we have changed the paradigm, and we kind of said, well, why does the journey drive a set of fixed data to decisioning who can only really then say yes or no? Why don't you let the analytics drive the journey and let the analytics say, can you give me this? Can you get me that? For this customer, I need to explore this. And Prince6 came out of that. And we create these things we call digital conversations, either self-service or through agents that are adaptive, that explore people. As you understand someone, you real-time explore it. And open banking is part of the data set that helps expand your understanding of the customer and explore that journey. Our view of open banking is it's an extraordinarily rich new data set that gives you a really deep understanding of customers' financial circumstances. We challenge some messaging that goes around, typically from credit risk people, around that gives you a complete understanding of the customer. It doesn't. It gives you an understanding of the financial circumstances. It doesn't give you an understanding of the life that is creating those financial circumstances. So where we pick up and we get all this wonderful insight from open banking, we then go, that's interesting. I need to understand a little bit about your drop in income. I need to see your benefits are going up. And we create these very personalized journeys to minimize the friction, but to maximize the insight that you're going to get from this rich data set.
Fantastic. So that's it, adaptive. You know, not everybody's the same. Behind a drop in income could be a number of circumstances, but the data from open banking drives that engagement with the customer to get behind the scenes of what's causing that and allowing you to lend responsibly as a result rather than treating everybody the same.
And there's one of the points we add in there as well. I think we work, so Bud is our partner that we have in the open banking space, and there's a report that came out for them last year that said, I think last year was about 1.8 million loan applications that were rejected because there wasn't enough data on these customers across the board. And when they looked into this data and they looked into these applicants, actually 80% of those could have been approved without having to change any kind of risk model as such from that lender across the board. They just didn't have the access to the data, and that data wasn't aired to those customers, to those lenders across the board. And it's fascinating of how much mass data there is in there at the minute that isn't necessarily a massive risk change or risk switch as such. It's just actually seeing these profiles and seeing the data in the background.
And we find, this is what I used to struggle with 12-week dev cycles. The cycles are too slow. So one of the things that we help our clients with is just making new data sets available in 48 hours, not in a 10-week dev cycle. So you're right. The world is innovating so quick. The typical embedded technology so many people have is just getting in the way rather than enabling all of this really smart decisioning to go on.
So you also saw it again, to go on the same conversation, you saw it again back in COVID, like at the start. And we looked at the data across the board, and what happened was that lenders couldn't actually pre-approve customers. You saw all the pre-approvals drop back because changing in circumstances that weren't there up front at the very instant in the time, they're relying on kind of age bureau data across the board and saying, well, if we had open banking data on these customers, yes, we could pre-approve, yes, we could offer to them, but we can't see what's going on with them right now. Their circumstances are changing day in, day out, and we're taking X many months to get that data through to us to make that decision. And that's when I think the first time I really heard it being heavily talked about, going, God, we wish we were ahead of the curve and had this stuff here right now. And that's kind of where that push is coming from, I think, in the industry.
Absolutely. I mean, you got this mismatch otherwise where the lenders were reining their belts in as to confidence of lending because of the changing circumstances. But whilst they were doing those checks at the back end around affordability and so on, they weren't passing that. The data wasn't coming through from the brokers and intermediaries. And as a result, there's a risk that individuals are being put forward to a lender based on their traditional bureau profile, only to find that when they got to the lender, a more deep dive understanding meant that they got rejected, which is obviously a very bad customer experience. So having that journey, that information at the front end means that everything is really smooth at the back end and the customer gets a brilliant experience. So I just want to get a bit deeper into the weeds. We are chatting, aren't we? Imagine the fire.
That's the far side.
So we're at a time where interest rates are as high as they've been for nearly 15 years, as we're all aware. I've just sold my house because I can't afford my mortgage, so I'm a statistic. You know, these interest rates are still rising in response to the soaring cost of living, because the interest rates are trying to control inflation, which is still over 10%. So how is open banking enabling you guys to better understand and support impacted customers? So if I start with you, Tamsin, are you in a position to describe the real operational challenges faced by lenders as the lender on the panel as a result of the current cost of living scenario, and how open banking can be used to better understand those customers and provide them access to affordable loans?
Yeah, so I think you know, we're seeing you know, a lot more applications, and that's because customers are struggling to find access to affordable credit. Our struggle would be with traditional bureau data is that exact market who perhaps can't get the credit from mainstream lenders are the exact ones who don't have the bureau data to allow us to lend to them. So whilst we very strongly believe in the power of credit bureau data, and we see absolute value in having both the open banking and the credit bureau data being the optimum for our customers, we're finding segments of customers that we should be able to lend to, we want to help so that they don't have to go to, we heard this morning about people, an uptick in people going to illegal lenders, etc. That is what we're trying to avoid with our customers, and make sure that we can onboard them, and we're struggling to do that. We're just looking at the credit bureau data at the moment, and we do use open banking within our journey, but we want to we're looking at how we can build scorecards that, especially for thin files, where we use that as the primary data source rather than the credit bureau data. So whilst we'll still always check our customers via the credit bureau, we would want to then put some, you know, people with not limited data through then an open banking specific scorecard. So that, you know, that's our struggle. And conversely, we've got existing members, so the pressure is at the moment that they're facing no savings, no, you know, ability to weather some of these shocks. Inevitably, they're struggling, and in our forbearance journeys, we have, for example, an automated forbearance journey to help with customers who perhaps don't want to speak to us on the phone or have got a temporary issue that they need some help with. And where we're excited about open banking data, we're currently using it in a very sort of, you know, the old-fashioned collections. You get on the phone, you do the INE with the customer. It's very painful. You're often left with inaccurate data, or it's not as efficient and as effective as if we could pull the data from open banking and have a real conversation with that customer about what's going on in their finances and how we can help them better. And to be able to use that data in an automated environment and to help agents on the phone is very exciting next step for us. So yeah, open banking is very much at the forefront of our thinking on how we can help accept more customers, give more credit, and also manage their credit better throughout the life of their membership with us.
I mean, the thin file angle is obviously a very interesting one. There's a lot of diamonds in the rough there. I mean, the scenario of thin file can be varied. Obviously, people starting out on their credit journey, the youngsters, you can very quickly identify using open banking which of those are people who are managing their finances well, and they can grow their credit access much faster than those you can see are being slightly less responsible with their finances, like my daughter, who I get a PayPal credit, you know, letter every week, it feels like, saying she hasn't paid her bills again. And then you've got those individuals who've come over to the UK, who are high net worth individuals, come to the UK and say, oh, I want a credit card, and then the best they can get is like £200 credit limit. at an APR of 1,000%. And they're earning well, they're paying their rent or mortgage. You can see they're managing their finances. Why should they have to be in the UK ecosystem of credit for 2 years before they start getting affordable credit? So again, open banking opens up a quick understanding of those behaviours. I think typically 3 months worth of data is enough for you to really understand whether an individual manages their finances well.
Yeah, a lot of our customers, the reason they take our product, a high reason when we do surveys, is that they're using it as a credit builder, many of them. And obviously that, says it itself. They haven't got the credit for us to be able to accept them in the first place. So, by using us in that way, we need another way to be able to approve them. And that is in the value of the open banking data, where we can see their income. And also on collections, another valuable, as we're looking at consumer duty at the moment, as we're, our existing vulnerability policies is looking at being able to identify vulnerable customers in the collections environment as well, and where we need to give, specific tailored support to those customers.
Thanks, Tamsin. Right, Charlie, you're in obviously a different position.
Yeah.
Can you provide detail on how the Totally Money app is leveraging open banking in order to provide real support to consumers to understand their finances better and use that data to their advantage when cash flow is tighter than it's ever been?
Yeah, so I talked earlier about obviously how we're using open banking in the lending space, but we are imminently due to, so that puts some pressure on our product team, but yeah, imminently due to release a new feature into the app, which is around kind of helping our customers look at their finances, plan ahead, and give some actual education towards them as well. So we are building what is called the payment planner, so it should be out in the kind of next couple of weeks or so. And what this is doing is getting customers to connect their current accounts to us via open banking, so our partner Buzz. We are then looking into this and saying, okay, well, we can see all of the money coming in, we can see all the money going out, we can see the bills coming out, when they're coming out. And what we're doing is we are building a kind of personalized platform as such that flags to customers when we can see they're going to miss a payment. So we talk in a minute about defaults and rising interest rates. We talk about mortgage payments going up, energy bills going up across the board. If you read the latest Bank of England kind of credit conditions survey, it came out this month. They're saying that obviously Q1, there was more defaults in the kind of lending space. It's also going to be again in Q2. So there's issues coming up here, and it's going to keep happening. We heard this morning discussions about all the expected kind of missed payments as such coming up from mortgages going up, and £300, £500 or so a month, and what that's going to do to customers. So what we're trying to do here is really pick up and help customers understand, okay, first of all, what's coming out of your account? When's it coming out? What's coming in? What are you going to miss? How can we start to kind of give you guys a bit of a heads up to say, hey, well, you think you're actually going to miss this payment, you should take some action now. Not in all cases you can't take action sometimes, right? We know that. But can we start to help them, give them a little bit of advice on how actually they can see these things coming and not be a shock to the system? The other thing we can do, which is great, and working with our parts of TransUnion as well, is that we can understand from the data actually which of these missed payments are going to hit their credit profile and their credit score the hardest. And so we can say, well, actually, these are things you start prioritizing over these. So if you don't want to make these payments, make sure you make these ones and not these ones to kind of actually, from our side of things, protect that credit score as best as possible. And so it's a really useful advice that we're using, as I said, and the core to this and the crux of this is having that open banking connection from the customers. I think when we talk about open banking and what's going to actually make customers engage and pass their details over, this is really personal stuff for our customers. The key is, what is that value exchange? Is it that you're going to get a loan? Is it that you're going to actually see a service that's going to help you make a payment? We need to be sitting there and actually advertising stuff as clearly as possible, because they're not just going to hand this data over to us. You've got to give them a reason, a value exchange, to actually go and do that.
Thanks, Charlie. Julian, we've talked about access to credit, access to finance, but there are some really interesting use cases that aren't traditional financial services, which often get missed. You in Prince 6 have facilitated a number of innovations in that regard. So can you give some examples, for example, how Prince 6 have supported clients to leverage open banking to identify vulnerability in customers and to streamline eligibility checks?
Yeah, so we're passionate about journeys, and you can't be passionate about journeys if you're not obsessive about conversion. And so we do things to optimize conversion and get as many people into the open banking journey because of the rich data. You don't get everybody in, so there's always got to be a separate path. But we do things like we understand the device they're on. So if they're on a desktop, we know conversion's better on a mobile. So we will move the journeys through QR codes or SMSs into the mobile so they can give consent, hand it back, point of sale environments, they can hand it off to the customer on the other side of the desk and give it back. So we do an awful lot in order to optimize that conversion point. And we then use it to understand vulnerability and find mitigations for vulnerability. To your point, Mags, a good example of why we did it was outside credit, because we're finding concept of this need to understand customers goes way beyond credit. Is one of our customers came to see us, is a telco called KCOM. They're a regional telco over in the North Lincolnshire, Humberside area. And they are under a regulatory obligation to provide social tariffs to low-income families. There was a combination of pressure from Ofcom onto the industry, but also they're a very local community-focused telco, and so they did this as a community thing. But the problem that they had, it was paper-based. It took 6 weeks to fill out the paper, send it off with evidence, go into operations, them to review it, them to call. It was a 6-week window to get this, and they were operationally maxed out. And so they couldn't scale even though they wanted to. So they came to us and said, can you help? And we said, yeah, open banking. Combination of open banking and alternative digital routes, but primary open banking says we can get from all of that information, we know what benefits you get, we know your income situation, we can apply all of your policy rules, and we can establish with evidence to KCOM that the customers who are eligible, who aren't causing just revenue leakage, but are truly eligible for the support. We delivered that in 6 weeks, and as of last week when I checked, the speed of application has moved from 6 weeks to 4 minutes. And the reduction in overheads to actually manage that operationally is 90%. So they hardly touch this stuff now. And the increase in accessibility to social tariffs has gone up by 150%. So it's just a really good example of if you use smart data and smart journeys, how you can transform, you can transform lives because they are now saving money that they am sure they need in other areas.
Yeah, you talk about revenue leakage. The water and sewage industry have really picked up open banking in this regard quite heavily. In order to, make sure that individuals are eligible for social tariffs, particularly at a time now where we talk about the cost of living. You don't want a protracted 4 to 6 week cycle in order to get somebody onto a social tariff and put them in a better financial situation. You want something that evidences not only the benefits, but also their other financial circumstances to be able to get them in a position of righteousness as quickly as possible. Right, I hope you've been good to your word. We do have other questions, I was lying, but Rob is going to come up as our Slido man. He needs a cape, ideally.
Wow.
Slido man, what have you got for us?
So I'm actually going to ask Emma to ask her a question, because I think it's
Oof.
rather than I just pull
Hi, Em.
Emma, go on, you go first.
I'm good, I miss you. You were on the main stage. I wasn't.
So my question is, we see that lenders are using open banking data categorically to say no. There are a few exceptions. I accept that. We're aware of this. So the concern is all about the fact that open banking shows negative data, and they're afraid of it. There's the lender fear that we've been talking about since 2016. It's not gone away. It still exists. Nothing is actually moving forward. So it's all about the fear of the regulator looking at affordability at future debt or conduct risk. How do we address this as an industry?
Shall I go? I mean, overarching wise, obviously Sam sat there from Experian with the Boost product, and there are some really positive elements that sit within transaction data that don't normally get surfaced.
I'm well aware of this.
You are well aware of this, but there are also
using it to say there's a gambling transaction. No.
But that's responsible lending, isn't it? At the end of the day.
Look, I challenge that because I was.
Do you understand what I'm saying?
Oh, totally. And I always describe this as the rise of the maybe. is that in an increasingly complicated regulatory world, is that, and I found this, frankly, consumer credit in 2013 was pretty easy. When you had a cut-off, you're in good, bad, right, you're in, you're out. Very straightforward. Now we've got, and then the FCA turned up and you said, well, they're good. I really want to lend to them commercially, but regulatory perspective, oh, I'm not quite sure I need to do. And those were the maybes. And of course, you go lob over the fence to an underwriter, and then when you do your time and motion studies and all that, you go, actually, it's too expensive and I don't have the structure. It's too hard. And part of our journey was around that said, actually, make that whole process of asking those extra questions that you don't ask to everybody because of the friction. Ask those extra questions that get you to say yes to those people in a way that's defensible. But that was a lot of the thinking that we had. We had this real tension of when we had a customer and you put it in front of compliance and commercial, they would always agree. It was always the cohorts that never agreed at. Because commercial wanted to get as many people through, and compliance always worried about the lowest common denominator. And so that is why that drives this. You have to have these efficient but personal understandings of the individual. And I just think that the world hasn't yet got, you've got a line I noticed on, it's not just about yes or no. It isn't just about yes or no, but I don't think all lenders have worked out that it isn't about yes and no.
I agree.
I think I was going to add in to just say, to your point, I completely agree. There's definitely a side of things, and we know from all the work that we do with lenders across the board, when we see reasons for decline, they go, well, we saw this customer, we accepted them, but actually we got the open banking data, and as you said, there might be a gambling transaction on there, and we go, we cannot ignore that as per what the regulator is telling us to do, right? So there is definitely an issue with this across the board. I think that when we look at this and we take it back a step and we say, okay, that's often them getting the data once they've already gone through the application stage, or at the application stage, not at the very start of it. I think we push that back to the very start of the journey when, let's say, biased towards price comparison websites and aggregators over here, but when you're taking that at the very start and you're getting that on the customer early on, is that actually when you look at it at that stage, and we're talking to lenders across the board, and these innovative lenders across the board, and they are saying that we are putting behind us about 15% or so growth coming through the next few years towards actually open banking enabled offers. And the reason they're saying that is that it's between improved acceptance, reduced rates and better journeys. And that's the kind of commentary that's coming out. We're not the regulator. We don't want to be the ones monitoring this and forcing this through, but we should definitely be sitting there and ourselves, Experian, ClearScore, Credit Karma, looking at this data and saying, well, look, you are now rejecting people further down the line based on stuff that you didn't reject them on potentially at the very start. This is not right. I said we're not the regulator, but it's something that we can see and it's something that we should air at the same time.
All right, we've got about 60 seconds. Tamsin, did you want to respond from the lender perspective?
Yeah, just that, our customer base is very different in that we're not seeing prime people. There's not a yes/no approach to our, we're there trying to help people. So we're looking for the extra acceptances rather than the extra no's. That's easy to say. And, we expect a lot of our customers to have transactions. We all have national lottery payments going out. I'm sure I do. On that vain hope that one day I'll be on a beach instead of here at the Credit Summit with you all.
Enjoy the fire.
Yeah, the fire's lovely, Mags. But, we all have various, and vulnerability and identifying that in whatever data you have is an obligation for all of us. But again, it's about assessing that, the level of that, the individual customer, can they afford it? And we all have different levels. But, for us, the open banking is the pure design of it will be to accept more people, to help more people, to stop them having to go to other unsatisfactory sources for their lending. So, there's a balance with everything regulatory, but we don't have a...
I think it's quite an interesting dynamic because I think it goes back to the question of data minimisation. Because the consistent push by weak applications is there's so much data here, I actually don't want it because it's too much. So that regulatory obligation, we look at it all.
You could be held accountable to it later, yeah.
There's an ongoing debate around the future of it in terms of minimising the sharing of data for the benefit of consumers and
Yes,
lenders.
so an opportunity for the bureaus to be creating true data products and scores that enable the lenders to lend without having that
I agree.
panic station.
I agree. There's another point I want to come on to, just because we tend to focus very much on the use of open banking application when you're first entering the credit journey. Given the obligations now about having to monitor customers, just want to ask you about your use of it in terms of ongoing customer management. So one of the questions that was raised is, if you see a change in my disposable income, could you use that to help me manage my repayment of the loan throughout the life of the loan? thinking about ideas in which, because lenders are going to have to monitor behaviour, how we can use open banking to better manage customers.
Well, I mean, I know we're very tight on time, but they're going to be flexible. They're going to give us a few more seconds on this. I mean, obviously, it's the ultimate tool potentially to monitor from a consumer duty perspective that the product that's being given to a customer is fit for purpose. It's giving the customer a benefit. It's not putting them in any worse position. And it allows you to see very quickly the impact of the product and to tweak the product so that it meets all the requirements of your customer base. But
yeah, we
industry experts.
Look, we see this as, I mean, we're working with the guys at Equifax around this concept of proactive rather than reactive vulnerability assessment. Or when you see triggers or you see things, reach out to them. Let's understand their circumstances. Let's proactively find mitigations through digital journeys. And it links also the consumer duty stuff. One of the things I think is a great opportunity for us that you're going to get these cohorts of people after you do your outcome analysis that you've got to cure. But how do you do something other than write them and say, call my call center? How do you create, you need to create more digital conversations. So I think the world is going to get more and more complicated around this customer engagement piece, and you have to find efficient ways to doing that.
Yeah, I mean, that's it. You can see clearly the indicators of vulnerability because a lot of those people with vulnerability signs come to you. But what about the people who look exactly the same that aren't coming to you? We need some kind of proactive engagement to be able to go to those people going, we suspect, in a sensitive way, that you could use our help. So, we're in a reactive society and, we're now in a position with this data to be more proactive.
Thank you, Karl. I'm going to pause the conversation.